if this guy who keeps popping up on every YouTube video I go on doesn't stop talking, do you know what I'm talking about?
Huh?
Do you know what I'm talking about? If you go on every YouTube video I go on, this guy's like, Bitcoin, everyone's talking about crypto. You know, one of my mentors years ago said, sorry, I'm here at the beach house. Here's all my lamp.
Yeah, Ty Lopez.
He is a horrible speaker.
I can't tell what's real and what's not real. And it's blurring.
Unbelievable.
I just can't believe in order to buy EOS, I had to buy Ethereum to buy EOS. How many levels down do I have to go to get these coins?
It is a rat hole. There's definitely
you guys are crypto haters.
I'm just going to hold.
You're just being crypto haters. I don't know why.
You don't hate the crypto. You hate the game.
I'm going to hodl. I'm going to hodl.
You're going to hodl?
Yeah. I'm just
Don't put out that FUD, Bob. Don't put out that FUD.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to the Money Path Podcast with your hosts, Bob Iacchino and Mike Arnold. On this episode, Get Rich Market Memes. The What and the Why is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with a conversation of news in the markets.
Well, did you hear the breaking news this morning?
What? Are we recording?
We're recording, but this is actually breaking news. Once my damn Thinkorswim. I mean, so when your cryptocurrency platform works better than Thinkorswim, you're in trouble. Is the big stuff out that the 400 million? Now, I don't know if this has not been completely confirmed, but the $400 million hack Japanese cryptocurrency exchange halts withdrawals as theft rumors mount. So supposedly, reports suggest that 526 million NEM coins, or XEM as they're listed, that's the ticker symbol, 400 million was stolen in the alleged Coincheck hack. So they've frozen all withdrawals except for Bitcoin.
That's why you just have to be a hodler. So then once they're stolen, you don't have to hodl them anymore.
You're just like this.
You got to get that on your Trezor.
You guys are being crypto haters. That's all I know.
Got to get on your Ledger S. Then they can't get your intangible coins.
Again, I'm not a crypto hater at all. I'm just the silliness. I had a conversation with a bartender with fake big and pink hair, and she's telling me about how you have to hold your Bitcoin, and I'm like looking at you, going, you couldn't even hold your up. You had to get new ones. What are you talking about? I probably should.
Maybe you can't put that.
She goes. I said that, and again, back to the show. You have to know that in the short term, and by that I mean 5 years, maybe even 10, there has to become mainstream acceptance, or the coins cannot survive. In the long term, that's not going to be the case. In the long term, I mean, prior to the Federal Reserve, institutions made their own money. They made their own notes, right? And they were transactable as long as the institution returned them back for the currency that was backed with gold. You can do that. And there are cryptocurrencies coming out now that are backed with gold, and they're not, or at least they claim to be. ConnectX is one of them, but that one's not even out yet. Anyway. But I digress.
At least with Beanie Babies, you knew you were buying a thing full of stuffing. You knew what it was.
Just this, so this particular person I was talking about a bit, and I was talking to this person about her Bitcoin holdings, and she said, you just got to hold them forever. They're going to $1 million each, and I said, unless retailers or governments start to accept them, they can't go there. And one of them will be accepted. Several of them will probably be accepted down the road, but there's no time frame on that. She goes, no, because the only thing that makes fiat currency worth it is the government backs it. I said, well, the government accepts it in payment for a tax debt. She goes, well, you don't have to pay your taxes either. I have a friend didn't pay his taxes, got arrested, and got off. I'm like, okay, you don't know what you're talking about.
That's actually
so. Yeah, that has actually never happened in the history of life. They got Al Capone on tax evasion. You're telling me your bartender friend got off? No, he's lying to you.
So the SEC, in Texas and North Carolina, they said, BitConnect, what you're doing is you're selling a security with unlicensed agents. That is extremely criminal. So we're shutting this Ponzi scheme down. And what's interesting is now all the people who are in cryptos that don't want government are begging for the SEC to shut down all these YouTubers. And someone filed a lawsuit against the YouTubers who compete against Pat Trading Partners videos for eyeballs. They're now all named in lawsuits.
Good, because Pat Trading Partners doesn't promise you riches. We just do an analysis.
We're getting rid of the scum. There's too much scum in cryptos. It's like the Joe Pesci element is getting taken out of cryptos.
There's a guy that does a video on cryptos, and he was using his support and resistance were based on the market cap. He goes, it's much more reliable to look at the market cap and not the price. Quick lesson on how you get market cap. Quick lesson for everybody on how you get market cap. You use the price as one of two denominators. Market cap mimics a price chart almost tick for tick. There's a lot of these guys, they use the price, but what you really should be looking at is the market cap. So here's the support on the market cap. When it gets back down on this market cap, they'll buy it again. I froze the video.
Hey, I've learned a lot from looking for the V pattern and the W pattern and the M pattern. Because those patterns are the patterns that
Stafford, you have to look for it on market cap because it looks exactly like the price.
I don't know which Lambo to get.
Real quick, I want to talk about a Twitter. I don't have a lot of Twitter fights, and I wouldn't even necessarily call this a fight because I always end all my Twitter back and forths with, we both agree, but thanks for the comment. Even if I don't agree with the person, because then it's always like, we appreciate you too. They always follow up with that. They always follow up with, we really appreciate your commentary too. Thank you. But this particular person, I did CNBC Futures Now this week, and I was asked to trade Bitcoin by CNBC. They said, we want you to give out a Bitcoin trade. They didn't really have one, so I went back to the Pat Trading Partners videos and watched Mike do his analysis on Bitcoin, and I took the trade from there. And this particular person said to me, he started out the conversation with, futures are there to manipulate the price of Bitcoin. I'm not reading it word for word right now, but I'm looking for it while I do. All right, here's my response to him. Anyway, he basically said, futures are there to manipulate the price of Bitcoin. If Bitcoin would create its own economy like in the deep web, but with legal resources, then nothing could stop the power shift through blockchain technology in the world. So my response to that was, as a general rule, I don't use the word manipulate without proof. But I don't disagree with the second part of your statement, meaning that if they have their own legal resources and their own infrastructure, right? I don't disagree with the second part of your statement. I'm a crypto and blockchain believer. The person followed up with example scenario, : early Bitcoin investor holds a large amount of the Bitcoin in circulation. He shorts Bitcoin futures and dumps a vast amount of his Bitcoin into the market before the futures expire, causing a price crash. He makes money on his Bitcoin and makes money on the futures. Win-win. My response to him was, in your example, the manipulation took place in Bitcoin, not in the futures. The person dumped a huge number of Bitcoin, the physical, into the market, causing a price crash. That would be the only example of any possible manipulation. And that's not manipulation. That's just somebody selling their assets and not enough people wanting to buy it from them. So the whole reason I bring this up, my answer was an early investor causing an early investor cashing out a profitable holding is hardly a manipulation. Thank you for the comments, though, and keep them coming. If you sell and the price goes down, that's not a manipulation. That is somebody selling into an illiquid market. That particular person is pushing price down. Now, people will say pushing price down to buy it back up. If you own it lower, why would you ever push it lower? Number one. Number two, push it lower to buy more. You're selling or shorting or selling profitable holdings in order to buy more to make them profitable. Makes no sense. If you're able to push the price down with a large amount of Bitcoin, your buying will also push it back up. There's no average price mathematics that works there. So the actual purpose of futures, the only possible manipulation would be that you buy a bunch of the futures and then cash out a bunch of your Bitcoin thinking you're going to cause a crash. And if you don't cause a crash, you make money on the futures, which kind of like takes care of your failure of your plan, right? Because if the Bitcoin goes immediately back up, you make the money on the futures. This whole talk of Wall Street wanting to manipulate cryptocurrencies is ridiculous. They're not even involved yet. I saw the interview with Lloyd Blankfein from Goldman Sachs yesterday, and he said, we've not started a cryptocurrency desk. We clear Bitcoin for our clients. We do not trade it yet. If it ever gets liquid enough, we will trade it. It can't get liquid enough until it goes to a price that supports institutions. It's not there yet. Everybody stop freaking out that futures are some sort of form of manipulation. They're the first opportunity for you guys that want to HODL to hedge that HODL risk. You could actually sell futures and hold your Bitcoin forever, because if it crashes, you won't lose money. And you don't have to continue to buy more. Anyway, everybody in crypto, stop using manipulate. No one wants to manipulate anything.
What is this? Theresa May, we're very seriously considering action on Bitcoin. She was talking Davos. What action is she considering?
Well, Davos has been just a Bitcoin basher's delight. Everybody in Davos is like, this is stupid, this is not real, it's not backed by anything, which always cracks me up, because neither are fiat currencies. They're accepted by something, but they're not backed by anything. They're accepted by governments. Well, yeah.
They used to be.
Right. They're accepted by governments. They are not backed by the government. They're only backed in the form that you can pay the government with it. You can't bring it to the government and get what it's backed by, because it's not backed by anything. But yeah, Davos has just been, look, you can go down the line anywhere from Robert Shiller, the Yale professor who is one half of the Case-Shiller Home Builders Index. He said that Bitcoin could be around for another 100 years, but eventually it's going to zero. That's a heck of a call, isn't it? He's not going to be around to see that happen. To see either happen, I guess his best bet is he's around to see it go to zero, but I still maintain Bitcoin is not the one, because they're just not working that I'm aware of. So you guys have heard of the Lightning Network? Have you read about that?
Not as probably as thoroughly as you have.
Okay, so the Lightning Network is a piece of add-on, I want to call it software, but that may not be the right term, that goes on to the Bitcoin blockchain that accelerates transactions so that they don't take minutes or even hours anymore. It's being tested on a couple of sites. It was tested on, somebody developed a Bitcoin-like demo site for pretend Bitcoin. It mimics the blockchain, but it's not a real coin. They tested it there and it worked, and now there's a couple of vendors who accept Bitcoin that are testing it. And so far, transactions are going through in seconds, verified, and the cost is back down to virtually zero. But again, just because of the structure of the blockchain, the more popular it gets, the more cumbersome and more expensive it gets. Lightning Network is supposed to fix that. And they started writing it about 3 years ago, so they only wrote it for Bitcoin blockchain right now. I guess that's why some people like IOTA, because it's Tangle and not blockchain, which Tangle, I guess, is sort of a backwards blockchain.
If Coinbase would just batch their Bitcoin transactions, then the mem pool would be cleared faster. Clear the mem pool. I'm hodling. Hopefully they'll clear the mem pool.
Why am I putting that FUD out there? There's no, by the way, just the function of people saying don't put FUD out there means if you tell the truth and it scares us, don't put it out there. But anyway, the whole idea behind the Lightning Network is it makes it more like Bitcoin Cash when you use Bitcoin. Bitcoin Jesus went all to Bitcoin Cash because of that deviation from their original plan. But IOTA, that I guess that is completely scalable, but it's not decentralized. So one of these is going to make it, and then the rest of them are going to mimic it. And I really think I'm comfortable saying this on the podcast. I know of someone who is working on a white paper for a government-based crypto blockchain currency. It's not the U.S. It's a smaller country. And this particular person reached out to me just for a little bit of commentary, anonymous commentary. But so I know someone. That to me are going to be the ones that start to exist when a government says you can use our currency or you can use our crypto. Those are the ones in the short term that you want to be involved in, I think. Anyway, what's Elon Musk doing?
What, besides his new pay package?
Which is no pay, right?
Well, it's no pay, but it's essentially, you want to talk about market cap?
I only saw the headlines, so I don't know what his new pay package is.
Oh, it's essentially the more he pumps up the stock, the more he gets paid in stock. That's essentially, there's 12 tranches.
Go crazy is what he's saying.
There are 12 market cap milestones, 8 revenue milestones, and 8 EBITDA milestones. They get more progressively difficult to achieve. He not only does Musk have a notional access to a staggering $70 billion in the long run in stock, but most of these things, unless he makes it the largest car company in the world, it's really not happening, or pumps it up to obscene valuations. It's really not happening, and there's nothing in there about profitability. He doesn't ever get paid off of profitability. It's just all if you pump up. Well, you talked about market cap, so if you pump the stock price up and he doesn't dilute it too much, he makes more. It's really interesting. So,
isn't he sort of representative of the era of limiting CEO pay and bonuses? Doesn't he sort of represent millennials and their whole anti-corporate greed thing? I mean, how is his pure incentive, his only incentive, to pump up the price of the stock? That's how he gets paid. How does that fit in with their culture?
I have no idea. You're asking the wrong person. But I just know it's the thing that struck me with this whole pay package is it's like, I guess you never have to make the company profitable. You never have to make it make money. You just have to, keep promising, over-promising and under-delivering. As long as the stock holds up, you get to make more money.
Yeah.
By the way, I did just see that the Tesla double bottom finally hit target.
I did not see that.
I even put out a video on our YouTube channel. It hit the target before
I only watch cryptos.
Crypto.
Well, so it hit the super reliable target 352. Then it hit the end of the clear path. Remember, we weren't going to the full target. The 361.01 was in the wicks. The end of the clear path came at 359.57, and it pretty much gapped open there. And then the last 4 days has plummeted like a rock. Today it traded down to 335.71, but it's essentially holding in its rotation zone on the daily. Still watching. It's still the massive weekly double top still in play, though, if it ever gets down below 300.
Yeah, I don't know if you've noticed, there's a lot of like double tops starting to form in stocks. It's like almost, I don't want to say almost every time, but quite often when I look up a chart, I see, that could be a double top. That could be a double top. Got a small one on like the CRM daily, for example, very small one that's could be developing, but we've seen these develop. It's like literally almost every time I open up a stock, I'm like, that could be one. That could be one. We got a small one like AK Steel Holdings, which is symbol AKS. None of them triggered. The more I pull them up, the more I see them. And we might be coming to an end of this new record without a 5% correction. I don't know.
Well, what's it been, like 367 days now without a 5%
No, it's longer than that. The record was 394, and I believe we broke that last week, Tuesday or Wednesday.
Or is it? We broke it earlier this week. I just forget what the streak was. We broke it.
We're on a line of, like, we're close to 400 days now.
Then it was 395.
It was 394 was the record.
Yeah, then it was 395. And that was 2 or 3 days ago. So we're closing in on 400.
On 400 days in the S&P, not the other ones, but the S&P.
And you know what's not doing well? Even though Snapchat is allowing users to share stories on Twitter and Facebook, not turning around their stock back down to 1350. Our other favorite camera company, GoPro, down to 581. Their GoPros, I guess they're shopping the company around. So that's in the news.
They should have done that a long time ago.
Yeah, they should have been shopping it a long time. What's that other one? I haven't checked on. Have you looked at Blue Apron?
No, I haven't. What's
Blue
the
Apron
APR?
trading?
What's the symbol again? Apron?
APRN trading 308 holding.
God.
Yes.
I had a friend call me recently and say, "Hey, now that Snap has dipped, should I buy some?" And I said, "Why else do you want to buy them?" "Nothing, just because it dipped." Wait, okay, forget it.
Get some cryptos.
What? Hey, how did the preliminary fourth quarter GDP number come out? By the way,
it missed. Headline number came out at 2.6. Expected at 3. As the year over year, the quarter over quarter was as expected. The core was a little bit lower. Slightly disappointing, but still not, nothing critical about it, nothing that ugly about it. More important today was the durable goods number. It was expected at 0.9. It came out at 2.9. So durable goods jumped.
I guess they're a lot more durable.
Yeah, the GDP. Yeah, exactly.
There was that long pause.
Yeah,
Don't spread that FUD. Don't spread that FUD.
A couple of things inside the GDP, though. The PCE deflator was a little bit higher, which is a price level, and consumer spending was a little bit higher. So all of those pointing to a little bit more price pressure for the Fed. So I think it was the mix of the lower GDP, but the higher price pressures that kind of kept the stock market up and kept everything kind of level. The dollar continues to go lower. Thank you, Steve Mnuchin. Which, I'm ambivalent about whether we should have strong dollar or weak dollar. I see both sides. And I've heard this economic argument for so long that it kind of makes my head spin. But the dollar continues to go lower, even as they try to walk those comments back. So clearly, the market doesn't believe that this was a weak enough GDP or strong enough GDP to move the Fed, or weak enough to move equities lower because they're higher. As I speak to you, the Dow's up 90 points.
The Dow's up every day. It's like
it's almost like I don't have to say this. S&P's up 13, and the Nasdaq is up like 48.
I mean, I look every morning. I look at pre-market futures. It's like, 5 points higher. Oh, surprise!
Wait, the S&P is the new crypto?
What would you stop with the crypto? Unless you're buying unless you're one of the 22% of Bitcoin investors that are using debt to fund their investments. There's a study that came out in the last couple weeks.
How many? Mike, how much?
22% of traders revealed that they have not paid off their credit and debit cards after purchasing Bitcoin.
Dear God, that's a huge number.
Yeah.
I'd be laughing at 8%.
Yeah, it's 22%. So
that's disgraceful.
Yes, that's worrisome. That's why we can see this massive volatility, because you buy in at some point and
it's like the Hindenburg. Again, crypto believers, blockchain believers, even though it doesn't sound like it.
Yeah, you guys are super bashing. You guys are.
I don't mean to. I love them.
Could you bash Netflix instead?
I love Netflix. Not necessarily the stock. I haven't looked at the stock, but I love the company.
Oh gosh, have you seen that?
So much time on that.
They released their
raised prices, right? They announced a price increase. They announced a price increase on their streaming,
and they they had their earnings come out. Well, they had net streaming additions at 8.34 million, expected 6.34 million. That's net streaming. International was 6.36 versus 5.05 expected, and U.S. was 1.98 versus expectations of 1.29. So they blew out their ad numbers. They're going to burn, though, between another 3 to 4 billion in cash in 2018. It's like the more because of their content, the more they add, the more they burn through their money, and they don't make money. But their stock price has now hit a high today of 273.39. In the last couple weeks, it's run up from 188 to 273.
Wow.
Yeah, it's gone vertical. Gap behind it, gapped from, this was a good one, 223 to next day it opened at 255. Now it's at 273. It's gone absolutely vertical. But what worries me, it's sort of, again, the Tesla phenomenon. Tesla doesn't make money selling cars. Netflix doesn't make money selling streaming services. They just keep producing more and more. They keep burning more and more cash, similar to Tesla. But can't complain. The stock keeps going up and up and up until it doesn't.
We have a little, I'm not up on this, and I know we're switching back, but can I have a little update on what you guys think of Tesla's delivery of Model 3s and everything else? Has there been any news on that lately, or they're still just way behind?
There's been tons of news. They're still way behind. There's a report on CNBC yesterday from a bunch of people supposedly from Tesla who aren't allowed to talk, but they're still building parts of the Model 3 by hand. They're having major problems building the battery packs for them. They're supposedly just now getting to the 1,000 a week, but the number of delivery issues, the number of cars that have significant problems on delivery is substantial. So
they're not reaching economies of scale yet, are they?
No. And what's the scary part is the stuff going on at the Gigafactory, which is producing the batteries for the Model 3. A bunch of stuff that's supposed to be automated supposedly is being done by hand, but when you do it by hand, it doesn't have the precision. So there could be potential major flaws in their battery packs longer term. It's not looking good for their Model 3 production right now. TSLA, Tesla, they are supposedly coming out on earnings on the 7th of February. So after market, we'll find out what their Q4 results are. And they're just going to go through a major cash burn again, especially because of that they haven't been able to pump out as many as they thought. And all these reports that keep coming out that are later verified by the Wall Street Journal that they just bash, they come out and call it, that's not right, your guys are wrong, and then later verified. So the Wall Street Journal's been doing pretty good reporting on some of the stuff going on at Tesla. And but we will keep seeing. The mission is to pump up the stock price. Hey Bob, what's going on in the crude market?
So crude oil continues to break out higher. Well, I shouldn't call it a breakout, really. It just continues in this sort of upward channel. A couple important things happened this week in crude oil. Crude oil is doing this thing where, and again, we discussed this on CNBC Futures Now this week when I was on it. Scott Nations wanted to sell the top of an upward sloping channel as this trade. And I disagreed with him on the show. I said, I don't disagree that it's probably, he called it overbought. He wasn't wrong about that. It's overbought. But as we all know, markets can stay overbought longer than what? We can stay liquid. So
he close to longer than 400 days.
Yeah, for sure. There's 400 days and counting. How about that? But he wanted to sell at the upper end of this channel, but you really don't want to sell at the upper end of an upward sloping channel because the market can stay in that channel and continue to go higher while you're shorted. Anyway, OPEC and Russia met last week. By OPEC and non-OPEC nations, I mean Saudi Arabia and Russia. And they agreed that the market wasn't balanced yet. As a matter of fact, that's a quote from Alexander Novak, the Russian energy minister, said the market is coming into balance, but has not balanced yet. So they reaffirmed production cuts for the balance of 2018 and even discussed extending them through 2019. Rig counts in the U.S. have kind of started to flatten out. But what I'm noticing in my own sort of look behind the numbers is that the rig counts may not matter as much as they used to, because CapEx is not up in the U.S. yet we continue to approach 10 million barrels a day in production. We're above our record ever. We get above 10 million, we'll be officially above the record. There's two tallies of what that record is. One is about 9.7, one is about 10.1 million barrels a day. So we get above 10 million, which it looks like we'll easily clear in 2018. We'll have beaten the U.S. record for production. And the IEA even has us above 11 million barrels a day in 2019. But a lot of that's being done fracking vertically, and then you put a pipe across horizontally, and that horizontal pipe pumps in sand, and the crude oil and water comes up. It's this whole process. Well, instead of spending CapEx, they're extending the length of the horizontal drill bits, some as far as 7,500 feet. So they're starting to get more oil from an area with fewer rigs. So rig counts, while flattening out and even going down last week, is not affecting production. Production is still climbing. It's just climbing at a much slower pace. And this is something we've said in this podcast, Mike and I've talked about, is that you don't just turn spigots on like it's a faucet. So everybody's like, oh, higher prices, the shale producers are just going to turn the wells back on. It is not the faucet in your kitchen sink. They sent home 75% of their labor force when prices dropped in late 2014 and all of 2015. You can't get those people back. So what they're doing right now is they're getting more out of each well while they're reopening wells that they'd already started digging. If prices continue here and the backwardation in the curve continues, which means lower prices out further, at this high level of prices, producers are able to hedge months and months out at prices where they can still make money, sell their current stock at high prices. So that incentivizes them to drill more to refill that stock, and continues this sort of CapEx push that's going to come from shale probably sometimes late in the year. Lastly, we just had our 10th week in a row of crude oil draws in the wintertime. That doesn't usually happen. So it's going to be difficult to replenish those stocks going into the summer driving season. So I would say that short term, the fundamentals of crude oil are up. Medium to long term, they're still lower.
Well, if we all just switched to electric cars, then we wouldn't need oil. That's all I have to say.
I don't want to buy a Tesla because that's not going to help Elon. I just want to buy a stock.
Well, no, here you go. Here you go. Breaking on Inside EV's website, the Tesla Model 3 ride quality inferior to old Nissan Leaf. There's a lot of Tesla bashing going on.
That's crazy. You had a Nissan Leaf. What do you think about it? Did that have a good ride quality?
It was a fine ride quality. I owned one. Yeah. No, but there's a lot of places that used to be super Tesla fans there's more and more negative Tesla stuff cropping up on it. So it's pretty fascinating what's going on. It seems to be losing some of its luster. But just as Stafford was bashing cryptos today, I guess I'm bashing Tesla.
Yeah, just because you have a car doesn't mean you can drive a crypto.
What?
I don't know what that means, but that was great. That stays in the show. I don't care what you say, Mike. That was fantastic. Guys, I got to do that at 11 o'clock. Talking. I'm going to mute.
So that's what's really bad about this entire space, is because when I meet somebody, they say, "What are you doing?" And I'm like, "Oh, well, I upload videos with the organization. They do cryptocurrency technical analysis." And they go, "Cryptos? Wow, I don't know anything about that. That's great." I could have easily said, "Hey, why don't you give me some money with my affiliate link on BitConnect, and you can invest your money and get 1% of your returns instantly every day. So in 30 days, you'll get 30% returns." And they go, "Great,
you
that's
can't get 1% a day?
Guaranteed with BitConnect." And now that they're gone, I got to go to Davos Coin and use my affiliate link.
Well, 1%, everything should just know that's 1% a day, uncompounded. That's 365% a year, but it's more since it's compounded. So that's natural investing. You should expect
exactly.
That's like our at this point
that's crypto. That's what crypto is.
It's even our stock market. That's what it is at this point.
Ponzi away.
So I was just running down how the words crypto and the words mining are infected by these career criminals who are using these crypto terms and there are no laws to run their Ponzi scams and schemes, and they are everywhere. So
this is the same thing that happened in the FX market. A legitimate trading market got this film of scum over it because these guys just came out and said make money in Forex and blah, 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 when it's actually a legitimate market. And I love that you're bringing this up.
And it's unfortunate because, if you talk to somebody and say, oh, yeah, what are you doing? Oh, I'm doing stuff in cryptography, and there's, it's very interesting. It's a volatile market. It's kind of more satisfying than stocks, from back in the day. They go, wow, crypto, that's really cool. But if a scumbag who is selling one of these scumbag criminal operations, they say, hey, it's all crypto. Trade your Bitcoin for our pretend crypto. And then in 3 months, we'll walk away with all the money. By the way, there are no people, there's no company, there's no organization, there's no phone number, there's no email.
Yep. Right. It's
you can't
awful.
make Bob. Everybody knows you can make 1% a day, though.
365% not compounded.
Well, didn't I say the same thing when he was on? We said the exact same thing because I can't work out the compound math in my, with the head. But it's well, look. You almost, if you just buy the stock market at this point, it just goes up every day.
Well, I don't know what's going to happen when you see it going sideways as long as it has now. I mean, seriously, you're still seeing 7 to 12% swings in the overnight. But versus what these people are used to on a straight up, you look at a Bitcoin chart. I mean, it's been sideways since the futures launched.
Yep.
Sideways to lower.
The other thing is, a lot of people who bought in, post Thanksgiving and the huge run up, they're still underwater. And they haven't paid off their credit card. So, yeah, I mean, you have everybody who essentially, let's see, let me call up my chart real quick. So we're trading right now at about 11,000. So last time it was 11,000 was like trading here. Last time it was the 3rd of December.
There you go.
So
that's a really long wait for these people.
Yes, anybody who's essentially bought even if you bought the dip right before Christmas on the 22nd, that dipped down to this 11,000 area. But unless you bought the very low of that dip. Everybody's underwater who's bought since essentially the 3rd of December, which is eternity in the crypto space. I mean,
and that's why people are not. You're already seeing things. Bitcoin is dead. You got to get into this. You got to get into that. And these are guys again have no market experience who think that when something moves sideways for a month, it's dead. Imagine if people thought about that about Apple's stock price in the 90s.
Yeah, it was all going down. That's what Apple was doing.
Yeah, I mean, Apple was in single digits.
Yeah, it was $8.
They were in the single digits.
But they had 90 days of cash on hand. They had no Steve Jobs. They should have died.
They turned it around.
I just judge the market by EOS.
oh god,
That's my largest holding. I think I have 6 EOS.
Everything into IOTA.
I can't buy IOTA at my exchange.
Oh.
See, I only have these lists that I can buy, so I can't get anything else. I bought the huge dip because I was in all cash, and I sold the peak. And I said, "I'm just going to buy a yeah, exactly. I'm going to buy a bunch of these cryptos."
He watches our channel. He watches the channel, so he get.
And my other rule is, if it's on Coinbase, I don't trade it, unless I have to move money out of Coinbase.
We are getting that reputation, though. Like a couple of weeks ago, it wasn't this past Friday, but the Friday before, I was in the studio at TD Ameritrade's online network, and the guy got introduced to a couple of guys that were on the panel with me, and they're like, one guy's like, "Hey, Bob, I checked out your channel, so you're all cryptos, right?" I'm like, "No, actually."
Because you don't know crypto.
No. You're like, we're gonna talk like stocks and bonds and crude oil too, so we'll come to you when it's cryptos. I'm like, "No, it's okay. Hey, I can talk about that stuff more than I can cryptos."
It's because that's what people want to watch on YouTube.
Hey, it's like having we're an Italian restaurant now. So you can't make steak. No, I can't make it, but everybody wants pasta. What do you want from me?
Pizza. Oh, I want to see something. All right. So I put up the Tesla video the other day because we had talked about it on our podcast. So, all right, Tesla. And Tesla, a lot of people know Tesla stock, and a lot of people follow Tesla stock. 54 views.
They're not crypto. If they came out with a Tesla coin, they would be getting some better press. All their stock market money has gone into the crypto market.
I'm going to say this on the podcast, on recording. If Tesla comes out with a cryptocurrency, I'm buying all I can. I'm holding it for about a week, and then I'm selling it after all these other people come in and buy it. I'm shocked there's not a Musk coin.
If they tie his compensation package to it.
There you go. They would probably steal. They'd probably call it a Nikolai coin, right? What would they call it? Musk coin doesn't really flow off the lips.
No, because they'll have to call it a Tesla coin because it will be to distract the media from their horrible corporate report that says they built no cars, they're making no money, and they can't get any more debt funding.
They're giving this guy a pay package that depends on the price of the stock. The same guy who sent out memos a few quarters ago saying, "Don't pay vendors. We need a higher cash position for when we report earnings."
The cars don't make money. You don't want to get a compensation for selling cars. The cars don't make money.
It's just unbelievable.
It's where we are right now. Oh, well, I think we've covered a lot of ground today.
I think we have.
Oh, boy, see in my email, Robinhood, that the Robinhood site that allows you to buy like stock and everything without transaction fees.
Yeah.
Don't sleep. Introducing Bitcoin and other cryptocurrencies. Get early access. Just showed up in my email.
It tells you they're not doing well with their stock sales.
With Robinhood Crypto, you'll get instant access to your deposits, real-time market data, and personalized price movement notifications so you never have to miss out on an investment opportunity again. Get excited, the Robinhood team.
I feel like I'm on a reality show.
That's like saying buy copper. Get into the exciting world of copper and buy copper. It's just a vehicle.
Access.
It's just investment vehicle.
Oh, my Lord.
All right. Well, we've covered a lot of ground, and you got to get back to Davos, Bob.
I got to get back to Davos, so I'm just going to tell you my why references Mario Draghi.
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gannon ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
Wrote an article this morning called Draghi Being Draghi. And that's really what happened. The ECB meeting this week was the most anticipated data point of the week, including U.S. GDP, including Davos, because Davos is just a bunch of headlines all day long of people saying stuff. No real things happen in Davos. You just kind of get people's opinions. For those that don't know, Davos is the World Economic Summit that's going on right now in Davos, Switzerland.
Where they sell $25 hot dogs.
Where they sell $25 hot dogs, and rich people complain about it. They complain about a $25 hot dog. Anyway, so Mario Draghi, they had the ECB meeting yesterday. The market was waiting, wishing, hoping that he would take responsibility for the EU economy, which has been very strong. And he somewhat did in the press conference, but in the statement, with, again, the EU has been the strongest of the larger economies in terms of data. German PMIs and EU PMIs are through the roof. GDP was strong. Inflation is up. And the euro has been rising, mainly on anticipation that Mario Draghi was going to, or I should say the ECB, but that's like saying OPEC instead of Saudi Arabia. Mario Draghi is synonymous with the ECB. That Mario Draghi in his speech or in his comments, prepared comments after the meeting, would take ownership of this and say that they might have to kind of look at their bond buying program, which they did have in the minutes of their December meeting, but they might need a second look simply because of how strong the economy was. Well, sure enough, statement comes out, and in the statement it still says we reserve the right to increase the bond buying program if data changes. As if that's somehow not implied. Remember that asset purchases are new. They came about since the crisis. No central bank, save for the Bank of Japan, had ever purchased assets before. So when they say we reserve the right to buy larger amounts than we're currently buying, no one's taking that right away. So there was no reason for that statement except to temper expectations that somehow Draghi was actually going to take responsibility for his own zone's economy, which he didn't do. He saved his strongest comments for the press conference, where he did say we see improvement, but, he said it in an accent, but we do want to watch the data. So he was very, very typical Mario Draghi, said very little, and still, even though he pointed out that even if they adjusted the bond purchasing program, rates would stay low well past the end of the bond purchasing program. And given that Mario Draghi never says anything, well past is probably really, really, really well past. So rates in the EU are going nowhere. However, he did use very strong terms to sort of scold Steve Mnuchin, the U.S. Treasury Secretary, who said that a weak dollar was good for countries' trade. Now, that particular statement kind of echoes what Donald Trump said in January, where he basically said that he was okay with a weak dollar. But it is the responsibility of the Treasury Secretary to implement the president's dollar strategy. And I don't think President Trump ever said our strategy is to have a weak dollar. So Trump goes into Davos and basically says that was taken out of context, which is true. He did say other things, but that was what everybody glommed onto, including Draghi, because it sent the dollar lower. A dollar that had already broken its September lows on January 12th and was already 2% lower at the time Steve Mnuchin said it. So he set it into a weaker currency already. I think it's a little bit of a lesson for the Treasury Secretary that he's got to look at what the market's doing before he makes a comment that could push it further in that direction. However, he's now in Davos saying our policy is a stronger dollar, and it's still not reversing the dollar because of what Draghi said. Because Draghi said if they were pursuing, I'm paraphrasing, but if they were pursuing a weaker dollar, that would go against what has been discussed. So again, putting out there into the ether that the central banks all sort of discuss things. And I think we knew that, but there's a confirmation of that. So Mario Draghi, again, did not take responsibility for his own economy, but pointed to others. It's my belief that Draghi, whose term officially ends October 2019, but may step down sooner, just wants everything the same until he's gone. And this guy is just riding a calm ocean and does not want to turn around and find a bigger wave, even though that's the way he should be surfing. So my why is don't expect Draghi to say anything, because he won't, and I don't know why.
Fantastic. I didn't pay attention to anything you said.
Why would you?
Because I'm on CoinMarketCap right now, drawing support resistance on the market cap price, which this is fantastic. This is absolutely fantastic. I love this. Hold on, I gotta download this image real quick and I'm gonna put it into the it is the price versus market cap line. Okay, I'm gonna drop this in Skype so we can all learn something here. because I've been totally mesmerized. Here we go. Uploading now. There's the price versus the market cap. 2 different colors. Can you see it?
No, they're identical. Thank you.
Well, they have some minor deviation.
The market cap is, and literally all the comments under this guy's thing was like, tremendous. No one else is looking at this. Tremendous analysis.